Welcome to the CLS Market Outlook for the fourth quarter of 2016. I'm Todd Clark.
And I'm Ryan Beach. In this report, we will review how CLS portfolios are constructed and how they have performed in the third quarter of the year. Next, we'll look at our investment themes and sit down with CLS's own Gene Frericks.
To begin, please welcome our Chief Investment Officer, Rusty Bannerman. Rusty?
Thanks, Todd and Ryan. CLS portfolios all share some attributes, which might seem remarkable given the number of investment strategies we offer. Because the needs of investors vary based on desired outcomes, such as accumulation or distribution of assets, we offer many different strategies. However, all of our portfolios share two key attributes. First, CLS's proprietary risk budgeting methodology is applied to the portfolio management of all strategies. Second, the CLS investment themes are incorporated into each CLS portfolio. Both the risk budgeting and the CLS investment themes are reviewed and approved by the CLS Investment Committee each quarter. So what does this mean for investors, and how has it impacted portfolio positioning and returns this year? Nearly all CLS managed assets are formally risk budgeted, meaning they are explicitly managed to a target risk level. This means that CLS is a strategic investment manager since we manage to a target, but we are also an active manager as we are actively making investment decisions by adjusting the portfolios due to changing risk and return expectations. How has risk budgeting worked? First and foremost, risk budgeting holds two promises. First, we will deliver on portfolio risk expectations. Second, we will actively make changes to the portfolios to take advantage of what we consider to be changes in expected risk and returns. On the latter promise, for example, we have gradually moved from larger to smaller companies in recent months. We also moved from higher quality to lower quality bonds earlier in the year. Both moves reveal our active nature, and both have helped performance. Also, risk budgeting helps our portfolio managers maintain portfolio risk despite lower return expectations for the U.S. stock market. Instead of getting defensive on the global stock market and raising cash, our PMs maintain higher allocations to stocks, which so far has worked well. As I stated earlier, the CLS investment themes are incorporated into each CLS strategy and influence portfolio positioning. Here to discuss how our investment team works within our themes is our Chief Investment Strategist, Scott Kuby.
There are 14 investment professionals on the CLS investment team. Half have achieved the designation of Chartered Financial Analysts. Several have approximately 3 decades of experience in the industry, and 2 of those individuals were CIOs at different firms before joining CLS. There are team members with MBAs, a CIMA, and a CMT. Hopefully a few more credentials will be added in the months ahead. It's an accomplished, experienced, and feisty team. Everybody has strong opinions.
Strong opinions? Are you sure that's the best way to say that, Scott?
Would you prefer opinionated? That seems worse.
If I may finish, I was about to share that we like to call it creative tension when we discuss market matters in our internal meetings.
All right, fair enough.
Given that each PM tends to have his or her own analytical biases and preferences, backed by their experiences and educations, it's rare we all completely agree on our market views and portfolio emphases. The CLS themes, however, tether all CLS portfolios together, determining the themes as the one vote that is required to be unanimous. Most portfolio votes on the various strategy teams are decided by majority rule at each quarterly investment meeting. Once these themes are established, each CLS managed portfolio and strategy articulates the themes in its own way.
Thank you, Rusty and Scott, and Grant and Josh. Earlier, Rusty had an opportunity to sit down with CLS Senior Performance Analyst Gene Frericks.
As we enter the fourth quarter of the year, Rusty and Gene discussed a few new studies listed in the QMO presentation.
In this quarterly market outlook, we have Senior Performance Analyst Gene Frericks here with us today. And welcome, Gene.
Thank you, Rusty.
You've
Good to
been
be
here
here.
for almost 20 years now at CLS,
Almost
right?
20 years. It seems incredible that it's been that long already. So.
And as everybody internally knows, you are the franchise. That is
Oh,
your
yes.
nickname. You know.
I don't know how I got shafted with that, but that is what that's what they call me.
It's well deserved. Well, you're invaluable on so many things that we do in terms of performance analysis, and a lot of the stuff in the quarterly market outlook you work on and your team works on too. There's a couple great new slides this quarter.
Right.
I figured you might want to talk about them.
Yeah, sure. One of the slides, Jackson actually did a lot of the research on,
Yeah.
and it's kind of like what if you were the worst market timer in the world, right? So you have your IRA, you have, your investment account, and every year you invest at perfectly the wrong time.
Right.
So, we always say, or the old market adage is buy low, sell high to make a profit. And oh my God, the markets are so high. What if, I'm buying in at the top, I can't make a profit?
Yeah.
Well, what the research shows is that since 2002, if you had perfectly bad market timing and bought at the high point of every single year, you would still have about a 6% per year return.
Yeah.
And of course,
it's a great study.
Compared to cash rates at less than 0.5%, that's a good return.
With so many people worried the market's at new highs, I think that's just a great study that you and Jackson Lee did. So, and Jackson is also doing phenomenal work. You guys are doing both. But another slide that we put into the quarterly market outlook is about diversification.
Right. Kind of a take on the classic Callan chart. So every once in a while we like to update that and get it in front of our clients. And I think it really does illustrate nicely how diversification is key. Yeah. And that you can get a smoother ride. Should never expect to hit the market high or the high point for any given asset class, nor be as low as the lowest one. I mean, that's one of the reasons we put multiple indexes on our performance pieces as well.
A classic chart. A lot of people like to look at it. It's very educational, so it's
just
great.
a good graphic.
Yeah. Well, hey, thanks for coming on the quarterly
Thank you, Rusty.
this quarter. So great. Well, thank you.
I'd like to take a moment, Todd, to thank you for helping us kick off our quarterly market outlook.
Thanks, Ryan. It's been a pleasure to be here.
I believe I can speak on behalf of all of CLS in saying we're all very excited to continue working closely together as you move on to your new role at Northstar.
Oh, thanks, Ryan. I'm really excited about my new role at Northstar and hope to continue to be very involved with CLS.
I think I've got the hang of this, Todd, and I know you have a lot on your plate, so I can probably take it from here.
You've done great. Guess I'll see you later. Thanks.
So far in 2016, our investment themes have been working. To review them and what they mean, and how they've impacted portfolios, we turn once again to our Chief Investment Officer, Rusty Vanneman.
X Factor is really a play on the concept of factor investing. In recent years, CLS has invested quite a bit into factor-based analysis and investing, which we believe will enhance returns over time and provide an additional risk overlay to our risk budgeting. How can investors determine whether we are holding true to this theme? The easiest way is to review our exposure to smart beta ETFs. Currently, the average CLS equity portfolio has about 50% or more in smart beta ETFs. This compares to the industry average, which is closer to 20% of assets. So far in this year, our emphasis on smart beta has contributed to approximately half of our excess gross returns relative to our risk budget benchmarks. The U.S. stock market, as defined by the S&P 500, is in a mature bull market. The last significant market bottom was in March of 2009. The market is now overvalued by nearly every valuation measure. While that doesn't necessarily mean a bear market is imminent, it does mean investors should expect below average returns from U.S. large cap stocks, again, such as the S&P 500, in the years ahead. Where can investors go for returns then? In short, international markets are much more attractive from a valuation perspective. Our own proprietary in-house expected return tool, called the CLS score, suggests international ETFs could outperform the U.S. stock market by approximately 10% per year over the next 10 years. How has this theme worked for CLS portfolios this year? In short, it's been a scratch. The tilt towards emerging markets has clearly worked, but the exposure to developed regions such as Europe and Japan has not. Nonetheless, this theme remains a high conviction view for us, and CLS portfolios now emphasize international markets even more than usual, including the undervalued developed markets. Our last theme is creative diversification. In short, it refers to actively managed portfolio diversifying exposures such as fixed income, commodities, or alternative investments. Actively managing fixed income involves much more than simply worrying about the status of the 10-year Treasury yield and where it is heading. That's important, but there is more to what we think about and how we position portfolios. In a written outlook this quarter, we break down creative diversification and discuss the details of factors such as credit risk, fixed income, commodities, and alternatives. Each play a role in how we are building portfolios and actively managing opportunity and risk. In total, the creative diversification theme has worked very well so far this year. Bonds are outperforming stocks on a risk-adjusted basis. Our active management of fixed income has had a lot more hits and misses this year, and commodities have also gained smartly. In total, this theme has also contributed to approximately half of our excess gross returns this year. It's been a strong year in global markets. Nonetheless, it's best to manage expectations moving forward. The key is to stay global, as we expect below-average returns from the U.S. equities, but better returns from international stocks. In fixed income, it is important to stay flexible. While return expectations are also tempered, bonds still have a role. However, investors need to be active with bond positioning. Thanks for watching. Stay balanced.
Thank you, Rusty. It is an exciting time for CLS and Northstar, and CLS is enjoying its strongest year-to-date in asset flows. With the exciting developments slated for CLS, our future is bright, and I am eager to lead the team into this next chapter. With that, we conclude our outlook for the fourth quarter of 2016. Our next market outlook will be January of 2017. Also, check back with us at the beginning of each month for our monthly market review, through which we'll give timely updates on portfolio positioning and how we're specifically applying our investment themes. For all of us here, I'm Ryan Beach. Thanks for watching, and thank you very much for your time and trust in CLS Investments.